Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. 12 noon, halfway through the trading session. I am Reema Tendulkar. With me is Nigel D'Souza, and from markets, we seem to be consolidating after the big rally that we saw last week. So 2.5% up move on the Nifty last week. The mid-caps gained close to about 4%. So today we opened at record levels. We lost a bit of ground from that. But now once again, we're pretty much flatlining on most of the key indices. The day belongs to ICICI Bank and Bank of Baroda. It's not getting reflected in the Bank Nifty, and that's because HDFC Bank is pulling its weight on the downside. So if you pull up the contribution plate, you can see an ICICI Bank right on top and an HDFC Bank right below. So it's a tug of war between these two large private banks.
That's right, Reema. If it wasn't for ICICI Bank, we would have been down by nearly around 10-15 points approximately. Important to note that we are flattish, but the rest of Asia is in fact trading with cuts of around 0.3% to more than 0.5%. The Hang Seng, for example, that's down nearly around 0.8% as we speak. So relative outperformance is what the Nifty is doing in comparison to some of the Asian.
Right now on our radar is M&M Financial. It's under a bit of pressure. That's down close to about 2.25%. It reported a good set of Q1 numbers. The disbursement growth was quite strong, 35% in this quarter, 40% in the prior quarter, and the strong disbursement growth lifted the AUM growth to the highest in the last 9 quarters. The stock is a bit subdued today, but bear in mind it rallied nearly 10% last week. In fact, now as we speak, that's M&M. Sorry, let's get M&M Financial up for you on your screen. That's the company that we're going to be chatting with. Ramesh Iyer, the Vice Chairman and Managing Director of the company, joins on the show now. Good afternoon, and thanks so much for joining in. First, if you could just start by highlighting the impact of INAS on your books in terms of AUM, net worth, and the profitability.
If you kind of look at the real impact of INAS for us is basically on the NPA provisioning, where the level 3 provisioning, has to be done as compared to the original. If you see under the Indian GAAP, it was very different. And therefore, the moment of NPA you see is around 9.5 and the net is at about 6.3. And that's the main impact. And as far as income is concerned, it is the service charges, etc., get amortized. But against that, the commission, etc., that's paid is also getting amortized. So therefore, virtually there is no major impact. So I think the only area of impact that you would see will be in the area of NPA for us. And that's the reason that you see the NPA also looks a little elevated. More importantly, the coverage at the level 3 looks to be at 35%, whereas if you look at level 1, 2 and 3 together, then the coverage is around 58%.
All right, Mr. Iyer, but if you could give us some guidance on the AUM growth, the NIMs, particularly keeping in mind that we're in a rising interest rate scenario, credit cost, as well as gross NPAs, all this for FY19.
So clearly, if you look at, never before have we seen the first quarter registering such a robust growth, or for that matter, even maintaining the NPA at almost at the March level. So it gives us even confidence to believe that clearly the rural sentiments continue to remain positive. And at the back of expected good monsoon and the infra spend that we see at different state levels, we believe that both the farm and the infra cash flow will hold up in rural India extremely well, the benefit of which would directly come to us. In the fourth quarter, we had opened about 100-odd branches. I think they are getting to deliver results. That's the reason that we see growth. The clearly growth areas for us have been commercial vehicle segment, which was of course at a low base, but we still have had about 80% plus growth in that segment. We've seen pre-owned vehicle growth, we've seen tractor growth for us. And as we've been saying almost all time, that every OEM is reaching out to this market in as far as the cars are concerned, and we've become a significant player in as far as car segment is concerned. And of course the Mahindra UV and tractors have been our lead products, where we have a market share gain happening. So I would think, put all of this together, we clearly kind of look at the rural sentiments to hold up from where they are, and the growth rate would continue to remain positive if this is what has been seen in the first quarter. So for us, the gross NPA is concerned, we are at about 8.1% on an gap basis if you kind of look at. and they are almost at the level that we closed in March. March was about 7.4 or so. Important to look at, while we've added in a 1 year period maybe 500,000 customer, but very clearly just about 10 to 15,000 contracts are moved into NPA. Normally one would see a 2 or 3% gross NPA increase in the first quarter, which get corrected in the third and the fourth quarter. With the lowest growth rate of NPA, we do expect as the year progresses and if the sentiments hold up the way they are, I think we should have a great time as far as rural sentiments are concerned.
How do you view the impact of the new Axle rules on the demand for your CV portfolio? And also, if you could throw some light on your housing subsidiaries. There, the gross NPA picture is a bit worrying. It's shot up to 16.7%. Can you walk us through the two?
So let me kind of take the housing subsidiary NPA first. I think the elevated NPA that you see is also an outcome of the India's norms that we use for this quarter. But more than that, I think in the state of Maharashtra, we did find, the cooperative banks' participation after the demonetization was much slower. And, normally the customers from that segment borrow from cooperative banks for their seed, fertilizers and all this requirement during the season. Whereas this time they resorted to kind of using up our EMI and have not really borrowed because the system was low out there. We believe that this would be the fastest correcting segment for us in the next 2 quarters, and you see them correct substantially in the 2 quarters. So we're not very concerned, while we are very watchful of what's happening out there. As otherwise, even at that elevated level of an NPA, you see the return on equity is very healthy, and therefore there is enough traction out there, and we believe that would get corrected much faster than anyone expects it to happen. As far as the CV demand is concerned, I think we are an enabler, and I'm sure the OEMs are working hard to see how they retain their volumes. We're seeing signals coming out to say, with these kind of new rules coming in, of course the consumer waits for some time before the rules settle down. But I think the axle vehicle demand would continue to remain robust, and we believe as an enabler, supporting the segment would be beneficiary of that. And it's not the only segment in commercial vehicle. There is tippers, there are other vehicles that get sold, there are LCVs that get sold. So we are not overly concerned about what would happen to us as a growth. While temporarily there could be some volume impact that one would see, but that would reset is my opinion.
Okay, thanks so much, Mr. Iyer, for joining in and giving us all those details about the past quarter. Keep an eye out on a couple of these stocks, though, from the broader markets. LG Balkrishna, well, it comes out with a set of numbers tomorrow. It's seen a sharp correction from the recent top. Remember the company, they're into chains of two-wheelers. So if two-wheeler sales were good, then in all probability, the numbers should reflect the same. Now, important part to note is that they do margins of around 12%. Some of these two-wheeler companies are doing less than 10%. So can those margins get squeezed going ahead? Today, the volumes are very large, more than 25,000. Normally, in fact, we don't have that much of volumes. Tomorrow are the numbers, so let's see what happens on that front. Interesting. We've seen a sharp correction, though, from the recent top. But talking about earnings then, Godrej Consumer, that's going to be reporting its quarter-one numbers. Mangalam's with us to run us through the key expectations. Mangalam.
Well, Nigel, what can I say? The stock, the company, a 120-year-old company, the stock is at a record high ahead of numbers. Not particularly cheap, trades at 44 times FY20 earnings, but a good set of earnings in this quarter are expected. 2 reasons why. One, the strong demand momentum continuing from the domestic business, which accounts for 50% of the revenue. Secondly, there is a favorable base as well. International business looks good too. So the revenue growth of 12.5%, that would translate to an EBITDA growth of 25%. Margins around that 18% mark is something that the street is bracing itself with, and a net profit growth of 32%, around that 300 crore mark is what the street is expecting. Important point to watch out from the domestic business is the domestic branded volume growth. 10 to 12% is what is on the cards. Analysts are penciling in that, given Q1 FY18 saw absolutely no volume growth. 0% is what the company had posted. Soaps revenue seen between 9 to 10%. Household insecticides, that's likely to grow much more, because remember, this is also the quarter where we have the onset of the monsoons, where people purchase a few more of those household insecticides. Hair colors revenue seen anywhere between 12 to 14%. For their international business, Indonesia is the key. Remember, on the base quarter, they have around 323 crores in terms of revenue. That is likely to jump up closer to that 400 crore mark in this quarter, so that will be a positive. And Africa, the previous quarter, that is fourth quarter FY18, the first half had 2 back-to-back presidential elections. So let's see whether there is some sequential improvement in Africa or not.
All right, thank you very much for that. The stock is practically at record levels, trading at nearly 45 times forward multiple or F520. Let's turn our attention then to the big one that we're going to watch today from the financial space. Abhishek Kothari joins in for the expectations for HDFC Limited. Abhishek?
The key expectation will be that you look at the IND-AS impact, that is the new accounting rule impact on HDFC Limited. There are few points to be watched out for. Number one being how they treat the zero coupon bonds. That will be seen very closely. The ESOPs, the big impact is what is the fair value, and that difference has to be debited by the P&L. The mark to market, now they have no impact on the group companies, but HDFC Limited has investment in listed entities. So mark to market, how that provision arises or the taxable arises needs to be seen. The commission paid to brokers both on liability side and the asset side of the balance sheet was earlier amortized over the period of the asset, but now they have to pay it at one go, so that will be seen very closely. Net interest margin about 3.75% will be positive. Last quarter it was at 4%, and the AUM growth, that is the asset under management growth of 18% plus, will be positive. Last quarter it was at 18%. Asset quality has not been a worrying factor for HDFC Limited, so gross NPA below 1.2% will be positive. Our polls suggest an NI growth of 16.5%, while net profit to grow at 35.5% given the fact that there was a low base last year.
Okay, sticking with numbers expected today, Interglobe Aviation, they'll be reporting their numbers as well. Sonia, what are we expecting this time around?
Well, you know, the stock is at a 52-week low today. In fact, the stock has been a big loser this year. It's down almost 16% for the year. Two reasons for that. One is the higher ATF prices because of the way crude has surged. And two is the big fall that we've seen in yields due to competition. So even last quarter, if you remember, the yields had fallen 5.6%. And that trend is expected to continue this quarter as well. I have some estimates from Kotak where they expect the revenue growth to be fine. Revenue growth of around 14%. That's because passenger growth has been very healthy this quarter. It's been at 20% in Q1, in line with what the industry has done. But the real problem arises in the operational performance, one because of the lower yields and two because of higher ATF prices. So the yields are expected to fall 6.5% year on year in this quarter, expected to come in at 3.1 rupees per kilometer, while the ATF prices have gone up by 28% on a year-on-year basis in Q1. All of this will cause the profits to fall by 71%. There is, of course, higher interest costs that will impact their earnings as well. So overall, expect a weak set of numbers from Interglobe. Perhaps part of it is already in the price.
All right, thank you very much for that. Keep your eye on Equitas. That has seen a sharp up move as we speak. So Equitas, let's get that up for you on your screen. It's now up close to about 1.5%. Big up move.
Well, JSW Energy is the next stock in focus on the back of their Q1 numbers. Now, a big positive is that their debt reduction continues. Mr. Prashant Jain, the joint MD and CEO of the company, joins us on the show. Hi, Mr. Jain. Thanks so much, sir, for joining in. Well, in Q1, though the top line was steady, the fuel cost partially impacted your margins. Do you expect pressure on account of coal prices to continue to stay for the rest of the year?
So I think we need to look it into the context. Actually, our majority of the portfolio is going to be on the long-term PPA side. It's only affecting only on the merchant side, the fuel prices. And otherwise, all other, whatever the fuel price increase is passed through for us. And primarily the margins were impacted because of the lower hydro generation this year, and which was a countrywide phenomena, because our generation was lower by 35%, and that is primarily because of the Sutlej basin. The water availability was less, but all India basis it was 20% lower. In terms of the fuel prices, I personally feel that they remain elevated, and then for the current quarter also there is a further increase in the prices as well as the further depreciation of rupee. So that's a problem for the imported based plants.
Okay. We understand that Unit 2 of Ratnagiri will be converted to a group captive unit. What's the timeline, the tariff, the ratio of merchant sale to long-term contract sale?
So, if you look at Ratnagiri plant, it is 1200 megawatt. Of that, already one unit is with the long-term PPA with the MSCDCL, and there is another 530 megawatt was with the group captive scheme. Now we have added another last unit also into the group captive scheme. And you know that Dolvi for JSW Steel is going for capacity expansion, which will be get completed in next 16 to 18 months time frame. So during 16 to 18 months time frame, entire Ratnagiri will be fully tied up.
Well, Mr. Jain, electricity demand slowed in the first quarter. What are the expectations for the year? Also, if you can give us some tariff guidance for the year.
So in Q1, 4.9% demand growth was there as compared to a similar quarter last year. It was 5.1%, but I reasonably expect that demand growth will continue between 5 to 6%. So it's going to be the trend. And in terms of the merchant tariffs, you saw 4.16 during the Q1, which is on the base of the last year, which was 3 rupees 26 paisa. So I think merchant prices will remain buoyant in the absence of the less coal as well as the higher imported tariff, and then increase in the demand. And so I see merchant tariffs coming down only in a situation when Coal India starts producing more than 650-700 million tons of coal, and then only I see the merchant tariffs coming down. Otherwise they will continue.
Well, those are GCPL's numbers on your screen. The company has reported a bottom line of 405 crore, which is bumped up on the back of a deferred tax of 116 crore. So that is the key reason why the bottom line is looking significantly higher than expectations. Awaiting more details, we were working with about a 12.5% revenue growth and margins to come in at 17.8%, an improvement of close to about 180 basis points. Volumes too are seen at about 10 to 12% on the back of a low base. So as of now, there is only one number that you have, 405 crore, which is boosted on the back of
I think, if I'm getting this number right, there's a sales volumes growth of around 14%, I think is what they've mentioned lower down in their presentation. And the sales growth, I think the sales growth is around 14%. It's driven entirely by volume growth of 14% is what they mentioned. They mentioned that the EBITDA growth is around 44%. Mangalam will just join us shortly and tell us what exactly he's making of these numbers. But that's what's mentioned in the press release, that the sales growth number is at around 14% odd. Mangalam's with us actually. Mangalam, tell us, and they've also mentioned some more details, the highest growth rate in 7 quarters in household insecticides. That's another factor. And the double-digit volume-led growth of around 17%. I think this is in the household insecticides division. Mangalam, take over.
Absolutely, Nigel. For this company, the household insecticides business was supposed to do well in this quarter itself. Sales growth of 14%, driven entirely by volume growth of 14%, again, is higher than what the street was working with. We were working with a range of 10 to 12%. That's what the majority of the estimates were. EBITDA growth was the number that we were working with was about 25%. On top of that, the company has delivered an EBITDA growth of 44%. So strong revenue growth. Add to that 17% growth in household insecticides. Out there, we were working with a number of 10 to 12%. The higher estimates were around 14%. Soaps growing at double digits. Hair colors growing at 12%. So this looks like a good set of numbers as far as the domestic business is concerned.
International business, I'll give you a few details. Right. International business delivers a constant currency sales growth of around 7%. That's driven by Indonesia. And adjusted EBITDA margins, they have mentioned, is around 14.3%. That decreases by around 50 basis points on a year-on-year basis. So that's some more details that are coming in there. Yeah, Rima.
No, I was just giving him. So Indonesia is about a 10%, and Africa, USA, Middle East, what they classify as GAUM, has seen about a 5% growth in terms of the sales on a year-on-year basis.
All right, so 10% growth in Indonesia is not actually particularly great, because the street was working with a little more than just 10%, but the fact that the margins have improved on Indonesia is a positive, because the competitive intensity was very high in Indonesia. So margin improvement means that maybe the efforts that the company is taking in Indonesia to protect its margins and perhaps improve upon their margins is good, though the street would have liked a little more improvement in Indonesian revenues. 10% is not particularly good, but the Indian business looks pretty heartening, to be very honest. Double-digit volume growth or rather double-digit growth in soaps, 12% growth in hair colors, a tad bit above our expectations. expectations. Household insecticides has done fairly well. 17% growth is something that the street will take with both hands, and the company has led a lot of innovations in that pack as well. 44 times, 45 times 2-year forward earnings. So a large part of it is perhaps priced in as well, which is why we're not seeing the stock rally a lot. It is at a record high right now. In fact, some profit taking as we speak, but not a bad set of numbers. Indian business really shines. Indonesian margins are above expectations. We'll try to see a little more in terms of commentary going ahead, but right now looks pretty good.
Well, right now, I think the subdued commentary is only coming in the international business ex of Indonesia, which is their Africa, US, where they're saying that Africa, USA, Middle East constant currency sales increase of 5% was entirely led by volume. Sales in the quarter were impacted by weakness in South Africa, while Kenya is seeing early signs of a recovery in business. Business ex-South grew in double digits in constant currency. So it appears South Africa was, the weak spot for them in this particular quarter in the international business. But the stock is now up close to about 0.6, 0.7%. Initially, there was a positive reaction when only the profit number was intimated to the street at 405 crore. But now when you look at the operational performance, it appears to be largely in line with expectations with a operational margin of 17.9%. The domestic business is looking good with a volume growth of about 14% higher than street expectations, driven by 17% growth in the insecticides business. International is, in line or maybe a bit subdued as well.
Yep, so that is, that's 50% growth, which is slightly subdued. Indian business, of course, is outperforming, which offsets the subdued sort of moves that we saw in the international business. What I like is about the management commentary where they're saying that demand is improving. They expect this recovery to sustain going forward. That's an important point. As far as India is concerned, they expect both urban and rural growth to improve. Rural growth will outpace the urban growth. This is something that a lot of the FMCG companies have said as well, and this will come on the back of remonetization, settling down of GST, and the government's effort to stimulate the rural economy. On top of that, they are accelerating their pace of innovation, and that is a positive for all the FMCG companies, because remember, the innovation cycle that usually precedes the demand cycle in FMCG industry. So that is a positive. All the companies are now talking about innovations. That is good for the FMCG demand over the next couple of years. But as of now, the stock is just holding up after a good set of numbers.
Yes, and they will continue to outperform the market and deliver industry-leading returns. That's the statement coming in from GCPL. I guess there is no big positive surprise, which is why the stock is not running
also
away.
The fact that it's at a record high, right?
Yeah, true. So.
Okay, all right. Thanks so much for that, Manglam. Well, so those are the numbers that are coming in there. Let's do one thing. The markets are still trading in the green, so we'll slip into a short break. You come back, we'll tell you how to trade the Nifty. Ashwini Gujral and Prakash Kaba, both of them will join us with their trading strategies.